This stock is down 50% from its all-time highs and I'm buying heavily. I have been accumulating this stock over the last few months and I want to walk you through why I think this is a golden opportunity. So for today, I want to cover what this stock is, which stock I'm talking about, what happened in their latest Q2 earnings, some key questions and answers from their analyst Q&A after earnings, a broader view of the luxury market and where this company is positioned, its intrinsic value, and my final thoughts. And you guys might have already guessed which company this is, and it's none other than LVMH. Welcome back to the Investor Show, and today I want to talk through what has been happening with LVMH. So LVMH is currently suffering from declining margins and sales. According to the CFO, this is mainly due to macro uncertainties and currency swings, so things like consumer demand, reduced spending, tariffs, inflation, you name it. The company has had a ruffle of cup years. In fact, over the last 2 years, it is now trading down 50%, almost 50% from its all-time high 2 years ago, and is now trading close to pandemic levels. So I want to talk through the Q2 earnings recap. LVMH reported earnings last week and they underperformed, missing both sales and profit expectations. This is a warning sign for the luxury market overall. In fact, revenue in the first half of 2025 was 40 billion euro, which was down 3% on an organic basis and down 4% on a reported basis. Profit as well was 9 billion, which was down 15% versus 1 year ago. The biggest business segment, which is fashion and leather goods, in terms of revenue, reached 19.1 billion for the first half of 2025, which is down 8% on a reported basis. And regionally, the company is seeing more demand, local demand in the EU and US, while Japan is down year on year. Despite this, the CFO said that in an uncertain geopolitical and economic environment, the group remains confident and will maintain a strategy focused on continuously enhancing the desirability of its brands, drawing on the exceptional quality of its products and excellence in retail. So which parts of the business are performing well versus the parts of the business that aren't performing well? The only business groups performing well under headwinds are essentially perfumes and cosmetics. These are priced accessibly for the mass market, allowing middle and lower income consumers to still buy into the brand regardless of inflation, tariffs, and lower disposable incomes. Also, the other business group that is performing exceptionally well are watches and jewelry. This target the higher end consumer. These are consumers that are less impacted by macro headwinds and have very large disposable incomes. So even if pricing was to get higher, they wouldn't be affected in any way. And thirdly is selective retailing. For example, Sephora. This channel is performing very well and LVMH has stated that they want to invest more here. So all these three segments are either the same as last year or just slightly under. So to understand why some segments are doing better than others, you have to look where LVMH sits in the consumer map. People often ask, can't LVMH just raise prices to offset inflation, to offset tariffs? And the answer is not really. In fact, the CFO said, we only raise prices when product quality improves, no cheap backs, we onboard younger clients via perfumes, via small leather goods. Vuitton focuses on brand elevation, not price tiers, and continues to gain market share with this strategy. So LVMH is doing two things, targeting the younger, the lower disposable income consumers with perfumes, with small leather goods, and they are elevating their high-end brands for high-end segments and high-end consumers. So that puts LVMH somewhere in between the luxury and mass market map. And that's tricky because firstly, with 75 different brands held by LVMH, it has all kinds of brands across the mass market and luxury market. Now, the difference is that the mass market consumers are more price elastic, which means that with higher prices, they consume less. Their consumer spending patterns depend very much on the prices, while the luxury segment, the premium segments, aren't affected by those prices. They're in fact price inelastic or insensitive. If you raise prices, it doesn't matter. They will keep spending, which is why companies like, for example, Hermes can raise prices freely. Their customers expect exclusivity. They expect lower supply and higher prices. LVMH, by contrast, can't do this across their 75 brands. And that balances and limits pricing power. So analysts have also questioned their brand portfolio, and in the Q&A I have flagged some questions which I thought very important. One analyst asked, in the 80s they had about 25 brands and now they have 75 brands. What will happen in the coming years? And I particularly liked the answer. The answer was that they don't want to miss good opportunities if they are there, and they will also get rid of brands if they underperform. We sold Off-White and Stella McCartney last year. The portfolio is a living organism and it depends on the opportunities presented. So this shows flexibility. LVMH adapts to changing consumer segments. So take Off-White for example. I remember when Off-White was huge, when Virgil Abloh was alive, but after his passing, consumer interest declined rapidly. Off-White was just a hype story. The brand is no longer that relevant to the younger consumer, to the people that were buying that product, and LVMH sold it. So it shows that LVMH is ruthless. It can be ruthless. They are looking for opportunities, but at the same time, they are looking to sell some of the brands if they are not performing. Another analyst asked about the drivers of price, mix, and volume. And the answer was that the company's pricing strategy focuses on improving product quality and functionality rather than offering discounts or promotions. The company also uses accessible product categories such as perfume and small leather bag goods to connect with younger generations and onboard them into the brand, which is exactly what we have been saying already. So my take is that LVMH is caught between trying to be the elite, but also trying to be scalable. But neither exclusivity nor scale is dominant. Simply raising prices for inflation and tariffs will not work because of the number of brands that LVMH has. So LVMH needs to strike the right balance between pricing and brand innovation. So here is why I believe in the long-term outlook of this company, because there are 4 strong tailwinds for the company. The first one is post 2025, so 2026 onwards, LVMH premium positioning will allow stronger growth. In fact, analysts are expecting revenue to be 86 billion versus 84 billion in 2025. Secondly, insiders are buying, which shows strong belief in the brand. Their No family has 50% of the company, yet they still bought stocks in April. Thirdly, they have the strongest wide brand and product diversification mode in the luxury marketplace. There is only one LVMH. There aren't other companies that you can directly compare to LVMH. And fourthly, they have the lowest price to sales, price to EBITDA, and price to earnings ratio since the COVID-19 crash, and they have 13 billion in cash. You guys remember how we were just talking about opportunities and them keeping an eye out if opportunities were to arise? Well, they have 13 billion in cash, and I do think that they will deploy them if they find something, if they find a brand that aligns with their interests, with their ethics, and with their strategy. In terms of historical financial and valuation, revenue, net income, and EPS all grew steadily and above 10% until 2025. This year, growth will drop and it has already been priced in. The average PE ratio over the last 3 years was around 24. And now the company is trading at a forward PE ratio of 21. Now the profit margins are quite low. They're around 5%, but I do believe that they will improve with consolidation and with cost cutting that the company is already trying to address. Also on a balance sheet level, the company has limited debt and there are no red flags here. And in terms of return of assets, equity, invested capital, they are good. They're not best in class, but given their asset heavy nature of the business and the number of brands they have and different business segments, I think that they are quite well positioned. Now, in terms of the intrinsic value of the business, I have projected revenue, EPS, and free cash flow growth to be about 6 to 9%, and that's from 2025 onwards. So that means I have already priced in 2025. So that means net income will potentially reach the level seen in 2023 at roughly 2030. And with that being said, I have also included an 8% discount rate and a 50% margin of safety, which gives an average intrinsic value with margin of safety of 362 euro per share. This is below today's price, but for me, it's still attractive. And my 2030 price target is 900 to 1,100 euro per share. In fact, LVMH is also paying dividend and buying back shares, returning value to shareholders. So I do think there are other aspects as well that makes this company attractive. With that being said, I am not adding any more shares right now. I have been buying the stock quite extensively the last month. My average price is around 450 euro, and I will consider buying again if the stock drops below the 400 euro mark, which I think is unlikely. But with that being said, I am a bit short on cash right now, and I will be rebuilding my cash position and will keep my eyes open if an opportunity arises for LVMH. I'm not selling the stock anytime soon, and I'm here for the long term. Shout out to my community. Thank you for the support. Thank you to the donations. If you can donate using Buy Me a Coffee link below, any donation, no matter how small, goes a very long way. Feel free to drop questions below. I'll answer them all. Subscribe for more deep dives, and I'll see you on the next episode.